Google Meet fucked up. Everything else is good.
Other than that,
So, first of all, please tell us how you end up trading
my
and
trading.
how your journey started with trading.
Okay, so I've been trading just over 7 years now. Just to give a brief description, let me quickly present my window. So people should be seeing YouTube. So just to give a quick overview of like my trading journey and everything else, if you want the long-winded one, head on over to YouTube, go to Trading Nuts channel, and type in like Trading Nut and FX like I've done here, and you can have the long-winded story. So we're going to stop sharing that. And in a nutshell, I've been trading for just over 7 years now. As most of you may know, I've been learning from ICT for about 6.5 years. My best mate is a market maker for an exchange, or was. And the way that my journey started off is I had, from the age of 16 to 18, I was studying finance and economics. So I kind of wanted to go the investment bank route because I had a cousin that was working for Deutsche Bank, and her husband, who's working for HSBC, they were kind of working with like high net worth clients. So that's kind of like where I had in mind where I wanted to go. So with that said, I finished college. I went to uni. I went to uni for about, I think it was about 4 months and dropped out. Might have been even less than that. Because I was basically traveling to London and coming back and studying a really boring ass subject that I just didn't enjoy. Like banking is just such a boring and dull subject. I didn't want to do it anymore, so I dropped out. After doing some research on the internet, there was a bit of a stigma in the banking industry that there's a lot of long hours involved. And I didn't really want, I'm quite a sociable person, so it kind of turned me off a little bit from going the banking route. So instead, I did a bit of Googling and found out about insurance. So insurance is kind of like, your typical 9 to 5, you get to work, you come home, and that's that. So I was working in insurance, and I just didn't like working for other people. So meanwhile, I also had my best mate, Ben. He started his trading journey. So his trading journey comes into mine because obviously he's my best mate, and he was starting off in as an IT consultant. He'd go to a trading floor and speak with other traders, and that's how he got involved with his first prop firm. So they kind of took him on as a noob, and he would basically get the train to and from work with me and chat a load of trading lingo that I just didn't understand. So that's kind of how my trading journey began. He made me open up a demo account. I didn't really understand what I was doing. I was trading oil, euro stocks, and oil, euro stocks, FTSE. Can't remember the markets I was trading at the time, but nothing to do with FX. So that's kind of where I started out. So he went on to become a market maker. So that's obviously become a bit of a buzzword in the industry. He's market making this and beat the market makers and everything else. I want to preface it that the market maker that I know and the market makers that ICT talks about, if you've ever gone through his work, are two separate things. They're not the same. So my best mate is a liquidity provider for an exchange, whereas when he talks about the market makers at the central bank level, he's talking about the overall control of the markets. So with that said, I went to spend time with these market makers, learn about the markets, learn about liquidity and things like that. And they were using something called market profiles. So that's originally what I started with. I didn't start with indicators. I was using something called market profiling. And I was also using the DOM and sprinkled on top a little bit of auction theory, if you've ever heard of auction theory. So that's kind of where I started my journey. And what happened is that these guys were paying about £2,500 per month to get their data and their basically to pay for their desk fees. And so when I saved up some money to quit my job, I was with MT4, and MT4 didn't have like its own version of the DOM at the time. It couldn't use market profiling and everything else. So I basically had to start from the bottom. Because I didn't have anything, I then went over to indicators. And so I spent about 6 months on a £1,000 live account, and I blew it in literally 3 months trading micro lots. So I was trading 0.01 lot sizes, and I managed to blow £1,000 in 3 months. So that went horribly wrong. That was not the start I was looking for. And then I started to Google like a banking, like institutional market making course, and obviously I was looking online. Obviously they don't do those kind of courses online, and then I stumbled across ICT's website. So that was about 6.5 years ago. That's when I started with ICT, and that's primarily about 90% of what I know has kind of come from him. So there's a large group of people. There's over 100 people in this meeting. On the Art of Charting show today. So we are all at different stages in our development, and we all have different personalities. We all have different methods. There's different styles. And one thing that I've learned, I used to be a very ICT is the only way type guy. I've learned from experience that there's actually a lot of different ways that you can make money trading. So you kind of have to find out what works for you. So because we're also at different stages in our development, some people here might be beginners, some people might be experts, you might be even more experienced than myself. And so I thought of a good way that I could give a trading plan out to each and every one of you for you just to practice, just to try and see if this gives you an edge in the market, or even improves your own trading as to what it is that you're doing now. For people that don't really know or are very new to trading, this will also help you get started as to what it is you can start with to kind of get your foot in the marketplace and start your trading journey. So I'm just going to share my screen real quick. So can everyone see my screen? Should be seeing like a Euro chart. Can I just get some in the chat so everyone can see it? Cool. Yes. Lovely jubbly. So we've got the Euro USD. This is my favorite pair. This is the pair that I've made most of my money on. This is by far my favorite market and pair. Just real quick, I forgot to mention, if you head on over to my YouTube channel, this is like a little bit of a plug-in here, which is youtube.com/AntsYT. If you want to learn about my best mate's journey and how our journeys kind of interlink, then you can listen to that over on my YouTube channel, and you'll be able to get a perspective on what a market maker does, and what their tool and what kind of things that they utilize. So with that said, what we're going to do is we're going to go ahead and start giving you a trading plan that you can use going forward. So when we first join up with trading, we think that we're going to make a load of money and it's going to be really easy. We soon realize that it's a lot harder than people think. And what happens is as a trader, you have a very high set of expectations. You think that, you see on especially social media, which I'm going to touch upon, there's so many people out there that are making thousands and thousands of pips on a weekly basis. Meanwhile, I'm doing my thing and I'm getting my 50 pips a week and I'm kind of carving a living out of that. It's you kind of think that you need to be doing the same as these other people. You need to be making 1,000 pips a week, otherwise you're not a trader. What you need to realize is that this stigma should really be ignored, because what's going to happen is you need to treat trading like it's your own business, and no one has the right to have a say on your business, even if they think that their opinion is valid. So what I'm trying to say is that when I started 7 years ago, there wasn't these Instagram traders that you see nowadays. There's not a load of gurus that are trying to teach, and all it was is that there was people that were trading, and that was it. So trading was like a professional thing. It was like any other industry. And I guess what I'm trying to say is that there are lots of opinionated people out there that think that they can have their say on whether you're doing something wrong or right, regardless if you're making money, even if they're at a state where they're not making money themselves. So what I wanted to touch upon with social media is, especially if you're trading live, a lot of people say, oh, well, you don't share your live trading with people, blah, blah, blah. Yeah, that's right, because you have no right to know what it is that I'm doing. I'm treating my trading as a business. And so if I start inviting other people to comment on my work, inevitably, whether you want to admit it or not, it will have a negative impact on your trading. I'm just going to take a swig of my drink. So with that said, keep your trading to yourself. If you want to show off, do it in a demo account setting. So here we have the Euro USD. So we have two kind of market profiles. You've got trending, and then you've got consolidation. So obviously we're currently in a tight consolidation. This is an hourly chart. So I've split it up. So you've got the hourly chart, a 15-minute, and a 1-minute chart. So what I'm going to be teaching here is I'm going to be teaching scalping. Most of you that don't want to be a scalper or aren't a scalper, I would tell you just to suppress your desires to comment on what it is that I'm going to be giving you, because you won't believe how much this actually helps all other styles of trading. I am not a scalper myself. I'm still practicing scalping, and I'm actually a short-term trader at heart. So what I do on my live account is I'm trading like once, twice a week max, and I'm trying to capture the weekly range. What I'm showcasing here is just lower time frames. So one of the things that I like about this trading plan is you've got, it doesn't matter whether you're in a trend environment or a consolidation market, there is plenty of setups that you can act on. So what I'm going to do is I'm just going to draw a price range, and I'm going to do it on the minute chart. And all I'm doing is I'm showcasing what 10 pips is. Again, so a lot of people are going to think, well, 10 pips isn't a lot. Trust me, if you can do 10 pips in one session, 1 day a week, if you can do that with 100% consistency, I know that doesn't exist, but we're just using round numbers for now. If you can do 1% risk and you can do 10 pips every single day, that's in one session, that's 22 setups per month. So that what we're saying is that that's like even with a few mistakes, that's like 20% a month return, doing very little. So what we're doing is we're reducing our expectations, and all we're doing is practicing. As you can see on this side of the chart, let me make this a little bit bigger. That would do it. Is we have our 10 pip range. Here we've got that higher time frame, which is an hourly chart. Can you see how small that range is in comparison to how many gyrations we have from this high to this low? I mean, we're technically working inside of this range here at the moment, but even in this tight consolidation in the past few days, can you see that there are many opportunities that you are able to get 10 pips? You can see this is an hourly chart, so this is 10 pips here, 10 pips here, 10 pips here. There's even 10 pips here. So you can see that with this, I'm going to move it back. What we're going to be doing is we're going to be focusing on just getting 10 pips per day, and that's it. Now, with a trading plan, it has to be pretty flexible. We've all got, stuff going on in our lives. So when is it that we should approach our trading? So we all know that the New York session is the easiest to trade. So, for example, this is going to be, for me, let's go out to an hourly. So the New York session for me is 12 till 3. So this in here is the New York session for me. So I'm going off of GMT time. I'm going off London. So many of you have been using New York time. Obviously, when I'm trading, I'm going to be at my charts actively trading. So I know what time it is because it says so in the bottom corner. So you can see here with the 10 pip range, you can see that does New York offer 10 pips. It does. Even in this tight consolidation where it's just up, down, etc., going into New York close where it clears this low, you can see that you can still harvest out 10 pips. Now, if we go down into a 1 minute time frame, all we're going to be doing is we're going to be focusing on a risk to reward ratio of 1:1. Now, most people will scoff at that because they rely on risk to reward to make their money. And trust me, I am a big advocate of risk to reward as well. So the larger risk to reward you have, the easier it is to take losses. But when we first get into the marketplace, we need to know how to practice what it is we're actually doing when we focus on the marketplace. What are we supposed to be looking for? When you come into the marketplace, you aren't going to be doing the same as these other guys where they're pulling out 1 to 30, 1 to 50. You get that with experience. How do we enter the marketplace? How is the market moving? How does the market operate? What kind of sessions do we have? Time delineations, etc. There's so many factors that go into play. Why is it that when we start, we have the kind of goal that we're going to make thousands and thousands of pips every single week? So what we're doing is we're just making it easier on ourselves. So you can see that 10 pips here is just a 10 pip range with a 10 pip stop loss. If you go and drill into the 1 minute chart, we can now see that 10 pips range is just from here to here. If we have a look at the measurement so we have 1, 2, 3, 4, 5, 6, 7, 8, 11, 12, 13. So it's about 24 minutes for this one trade to pan out. So it's 24 minutes for a 10 pip range, which is very, very minuscule. So 10 pip stop loss with a 10 pip range. If you use this going forward, I guarantee you that you're going to start to notice big developments in your own trading, because it doesn't matter if you're a short-term trader, it doesn't matter if you're a swing trader, position trader. I think that everyone here can agree on one thing, and that is that reducing your risk is awesome. Like the smaller your stop loss can be, and the minimal drawdown that you get when you enter like what they call like sniper entries, like precision entries. When you get like minimal drawdown and you're entering on like with precision and then it turns away, like when you use that as, say, for example, this 10 pip range, and you got a 10 pip stop loss. If you then apply that to a day trader's aspect where you're looking for, say, you enter in London, you exit in New York close, and you're looking at a 50 pip range, well, that's 5:1. That's day trading. What about short-term trading where the weekly range is roughly 250 pips, 300 pips, and you're looking for 100 pips? Well, that 10 pips range is also going to serve you, because the stop loss that's also 10 pips and the minimal drawdown that you incur, if your target is on that higher time frame and you're looking for a 100 pip range, that's 10:1. So don't discredit just because you're practicing in a demo account that this is only a 1:1 ratio, that this can help any style of trader. So with that said, going back to the time element, when is it that you're going to be in front of your charts? Again, everyone's got different lives. We're in different continents. Sometimes, some people are sleeping during New York session. What session is it that you want to trade? You have 4. Primarily, you have the Asia, you have London, you have New York, and then you have New York close. You also have a fifth one, which is London close. So you technically have 5 periods where you can sit in front of your charts and take a trade just like this, where you just set 10 pip stop loss and a 10 pip take profit. And what you're trying to do is you're trying to get as close to the market as you possibly can, and you're trying to minimize the drawdown, and you're just banking 10 pips. One of the big things that a lot of people ask is, what's the bias? Like, I need to know the directional bias. If I need to know if I know the directional bias, then I'll be able to make money. If you see within this range on the hourly chart, you can see how we're going backwards, forwards, backwards, forwards. And there's a lot of buying and selling taking place inside of this range that I've just delineated. All you need to know, without me saying it, is, without me saying it, how do I say it without actually saying it? If you look for the liquidity points and you mark those out on your chart, what you'll be able to see is that there's opportunities to go both long and short. So sometimes, even if you're counter trend on your higher time frame, you can sometimes get, say for example, this market here is bearish, right? We're going to say that this leg carried on going lower, 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 and gone for this low. Can you see that there's an opportunity in here to go long? There's an opportunity in here to go long. If we then add that 10 pip range on an hourly chart, there's 10 pips in there. So if you understand price delivery, and obviously there might be people that don't even learn from the same guy that I do. If you're learning price action specifically, you will be able to see both sides, and you don't technically need a bias. So say for example, you're a day trader and you're looking at the daily time frame as your higher time frame. The daily time frame might suggest that you should be selling only. Whereas you could technically use an hourly chart and look at these reference points where the liquidity is purged, and you could fare out a long opportunity. And this is even without going into the lower time frame yet. We can see that there is a 10 pip range to go long in here. If I just drop a line on here, there's 10 pips in here. If you apply your risk management, so we'll talk about risk management for a bit. My personal preference for risk management is following something called the 1% rule, which I learned in a book. I can't actually remember the name of the book, but all it is that you're just risking 1%. So in this case, you'll be risking 1% to make 1%. Over time, when you realize like the level of precision that's available to you, if you then applied this to another style or method, so for example, you get really good at scalping and you have enough range in a certain session that allows 20 pips, even in one given session, you could go for a 2-to-1 setup, and that could be your model. If you're a day trader, again, you could use that same 10 pips, but scale it, and you could look to get 50 pips. But with those styles of method, it's very, very important to keep your higher time frame behind you so that you know what you're doing. Just want to get a quick update that everyone can still hear me and that I'm not just talking to myself. Yeah, lovely. Okay. So give me 2 seconds. I need to swig my drink again. So what we're doing is we're trying to drill down how to make trading as easy as possible for ourselves. If you sent a trade, for example, I did so here, which was my YouTube video, Regular Pips. And I'm going to give you the framework as to how I took this trade so that you can go forward and sort of look for what it is that you want to apply to this trading model. And we'll talk about that in a minute. I took a test to see what people thought, and it wasn't really the response that I was looking for. what people say is that, oh, that's only 10 pips. Oh, that's easy to do. Well, okay, if it's easy to do, then why aren't you doing it? Because that's the kind of logic that I'm going with. If something's easy and trading is easy, why can't other people do it? So this is something that I really want people to kind of go ahead and start practicing, and you'll start to see all these trades, both long and short. If you study enough and you journal correctly, you will see all kinds of opportunities that are available to you. You can see that from this point here. I'm just going to draw another level. So this is a price of 18,762. Does that give you 10 pips? It does. So we've got 10 pips here, and you can start to see as all you're doing, do you have the what's the word I'm looking for? Like discipline. If you have the discipline to stick and just take 10 pips and leave all the rest on the table, you can be a trader. Trust me, you don't need the whole entire range to become a trader, because if you're risking 1% on a 10 pip range and you have an accuracy rate of about 80%, you can just use 1-to-1 and still do very, very well and pull out a return of 10% per month. That one is 120% return every single year, and that will double your money. So if we have a look at this range from this, so where we entered, just down to this low, you can see that there's a range in here from this price level low to this this price level that I've dotted on here, which is 1.18762. You can see down here that we have a range of 24-25 pips. So you can see that if you was to be a day trader, there's an opportunity to take 2.5% on just one trade alone. And that's just using the higher time frame, like without even drilling down into the 15-minute time frame to really drill down and get the accuracy that you're looking for. You can see that 25 pips is available there. And if you look at price action on a day-to-day basis, so I'll give you kind of like a day in the life, like a brief day in the life of AntFX. Basically what I do is I wake up for the London session, which is in 6 a.m. I grab my cup of tea, obviously. Once I've got my cup of tea, I come upstairs and I'm basically looking for the range of 10 pips to form in London, and I'm taking 10 pips out. Then I'll go do whatever. I'll go to the gym, I'll have my lunch, whatever it is that I do. I'll come back for 12 o'clock at the New York session, and again, I'll look for the same 10 pips. When it comes to journaling, you want to be journaling every single day. This is the so-called work that's involved, the real stuff behind the scenes that people don't see. The journaling where you're looking at what happened in each session, and also going through it in hindsight as to see whether, like all these, the 10 pip range that I gave you, just to look for a 1-to-1, 10 pips and off the table, have a look in hindsight and see how many times it unfolds, because that is velocity. So you don't necessarily need to have 1 in 30, 130, etc. You don't need it. Although it is very, very helpful, you technically don't need it. But at the same time, if you can reduce your risk enough, you'll also increase your reward depending on what model it is that you're using. So with that, does anyone have any questions about this model at all that you want to know more of? So Eric's got a question about the daily bias question. And obviously I'm going to have a Q&A right at the end, so you can ask me whatever you want, but specifically based on this, what I've just discussed, does anyone have any questions? Okay, so velocity. What is velocity? Oh, sorry, Eric, let's start with you. So do you base your short-term bias on liquidity and where it is instead of basing it from a monthly perspective? Yes, I do. So when I'm looking at my short-term bias, I'm looking at where is the current liquidity resting in the marketplace. So when you're looking at an hourly chart, it's always new. it's like forming. It's always going to be slightly different, even though the same stuff's going on in terms of what the market is actually doing, where like how it's moving around, etc. Even though that stuff, this stuff is the same, the way that it looks is different. That's why it's generic, right? So when I'm looking at my short-term bias, I'm just looking at the current range that I'm working within. I don't care about any of the past price action or the daily bias or anything, because you technically don't need it if you're going to be a scalper. This, I personally believe, is like the best way for someone to practice, because like I said, it doesn't matter what kind of trader you want to be. If you can reduce your stop loss to 10 pips, you can do extremely well. So all I'm looking at, just to answer your question, short-term bias, I'm obviously using the hourly chart, and I'm just looking at the liquidity reference points, because what you'll see is obviously you have like this bounce in here, which was formed off of this. So you have liquidity point, liquidity point, liquidity point. Then you have this price level that I outlined. That in there is a trade. Even though the daily bias might technically say, okay, well, the dollar's going lower, therefore euro needs to go higher. But all I'm doing is that I'm framing the trade off of the purging of these lows in here. So once that liquidity is taken and I'm working inside of this range, this could give me a buy. Now, everyone is going to view the market differently. Everyone is going to have their own thing. So what I see as a trade, you might not necessarily see as a trade. If everyone in this meeting right now, if we all had 100% accuracy, would that mean that we're all taking the same trades? I would say that we probably are, but what you would say is, well, there could have been someone that saw this as, okay, so we've come down and we've reached this liquidity point here, and it needs to return back to this liquidity reference point here. This in here could be a long. What's wrong with that? There's nothing wrong with that. There's 10 pip range in there. But at the same time, someone else who might be selling it in the same market environment might be looking for the short. So everyone can be trading the same market, but everyone could be making money. And that's kind of like the reference, sorry, not reference. That's the kind of mentality that I want you to have. So velocity is how quick you can turn your money over. So if, say, for example, you have a 10 pip range in here, and you could have another 10 pip range in here, you could have a long in here, which is 10 pips. You could have a short in here, which is 10 pips. That's velocity. What it means is that you're turning your money over quicker with multiple transactions. So you're putting your money to work quicker. That's what velocity means. What do I write in my journal? So when you're journaling, 1 second. So when you're journaling, the kind of things that you need to be looking at are obviously the liquidity reference points. You need a frame of reference, which is your framework, which is on an hourly chart. You need to drop it down into a lower time frame, which is a 15-minute time frame. And you need to see like the level of precision that it offers. So this is an example that I'm giving here. We'll just jot that on there just so people can see. So reference point, which is high time frame points of reference. So if we say this is kind of how I look at the marketplace, right? So I'm obviously looking at the current range that I'm working within, and you're using the high time frame for your so-called bias. So obviously it goes without saying that you need to reference off the points of where you want to see the market return to. You can also see in here this big red candle that I'm just going to highlight here. So we have here where it takes out the low, hits here, 10 pip range in here. You could go long off, and then obviously it needs to go back to a liquidity reference point, which I've outlined here. So when you drop down into your lower time frames, you can see the level of precision that's available when you refine your levels. If you look at this, and we'll zoom in, you can see the level of precision that's available. What's the drawdown on this? So the high is 1.18523. So 523, so that's 6. So yeah, that's 0.6 pips drawdown. So it's not even a pip, basically. And these are the kind of ones that you want to fare out because, and then do you have the discipline to go in, and we'll again take our 10 pip range. Where's my, that's date and price, but we'll take that one anyway. Do you have the discipline to work something like this? There's lows in here, short in here. So we do a hypothetical short position in here. We'll say here, we'll say, yeah, plus the spread. Move this over, zoom out a little bit. There's 10 pips, which is just above these highs. And then we've got 10 pips, which is this low here. That in itself is 1% on your account. So don't underestimate the power of this model, because it doesn't matter what type of trader that you want to become and how you use the information that you've learned. If you apply it to this, trust me, over time you'll start to see shit. And it's like fucking voodoo. And then once you are very, very comfortable pulling out consistent 10 pip ranges, you can then start to look at the market in a different view, which is, okay, well, we have our next liquidity reference point, which is under here. So that's 18 pips. So that would be about 1.8%. Yeah. So if you round it to like 20 pips, say, so for example, you want to go from, okay, we've started off with 10 pips and I can consistently do that. Well, okay, how can you do it with 15 pips? All right, now you've got that down. What about 20 pips? And what you'll realize is that the larger the ranges that you work within, the harder trading becomes. So you want to start off as easy as you possibly can. And then once you gravitate towards this 20 pip model, which is almost double, you can then see that with the same risk, the same everything, with a different framework. So instead of targeting this low, you're targeting this low. You can see that 20 pips is available. Therefore, that's 2%, which in risk to reward terms is obviously going to be, you know, double your return on whatever it is that you're risking. So when you're journaling, I went off on a bit of a rant there. Is you want to note the liquidity reference points, and you want to do everything in hindsight. When you've jotted down, so if we zoom into, say, just one chart, and you've referenced all the liquidity points and everywhere where it bounces, and obviously, like, you can see that there's certain aspects of where the market wants to hit. All you need to do is you need to have all these charts, kind of like what I've done here with this big red box. Obviously, I know what that is, and if you're journaling on your own, you're going to know what it is that you're referencing on the chart. What you need to do is you need to go through in hindsight at the end of each day and just see how price has traded, and just have a look at the amount of opportunity that is there. That doesn't equate to actually doing it. But the more you do it in hindsight, the more you'll see things unfold before they happen. Once you've got that down, you can then do this little thing down here, which is your paper trading or demo trading. So what you can do is you can write down on a piece of paper, okay, long position at 1.18664. Take profit is obviously 564. And then stop loss was under here. Did it pan out? Yes or no? And things like that. Then once you've got that down, you can then go into actually demo trading, and then practice with a demo account. And you'll incur more problems. You'll incur things like over trading that you didn't know about before. Whereas when in hindsight, everything's clean, everything looks perfect, which it is. But you can see that with the journaling, you'll be able to see things before they unfold. And if you have the discipline to stick to the initial model that I gave you, which is one setup per day in a given time frame. So, what session is it that you want to trade, and obviously fit that around your lifestyle because everyone's different. And just, give that a go. When you say, so people ask me questions like this. If you are with ICT, what series should I watch? All of it. Watch all of it. Everything is a salient. Like a lot of people say, like they want to keep it simple and things like that. I can kind of agree with that. Like if you have a model that works, you should really stick to it. But who wouldn't want to learn as much as they possibly could about like trading? Doesn't really make sense to me. I'd want to learn as much as I possibly could about how to read price action. So if you're saying, so is it based on the Wentz series? I mean, the Wentz series is the very, very first series. I don't actually remember watching it. That was years ago. So is it based off that? Maybe. I don't know. I'll have to rewatch the Wentz series, actually. It's been quite some time since I've done that. Yeah, so with that, sorry, fucking hell. Journaling. Right, let's get back to journaling. Once you've done all your annotations, so you've got all this space over here to use text. Blah, blah, blah. I expected this to unfold, and be very, very, be very, very careful when you're writing out your journal. Don't have anything emotional, how do I look at it? So emotional vocabulary, keep it out. Keep it out of your journal. You want to keep everything subjective in the sense that I thought this was going to do this. This is what happened. I was wrong because. And just keep it like that. Don't do things like, I'm a fucking dickhead. I'm shit at trading. I'm never going to get it. Don't do stuff like that, because what you're doing is you're feeling all these emotional connections with the marketplace, and really the marketplace does not care about your feelings. So you can be pissed off at yourself, that's fine, but don't put it in your journal, because this is like a very, very personal thing, and this is going to be how you get better at trading. So you can see that even on this 15-minute time frame, like you'll start to see things like just pop off at the chart. So obviously I did this one here, which is a hypothetical example. What about this one here? Liquidity reference point. And this is just on a 15-minute chart that I'm doing this. Obviously you're going to do it on an hourly to get the direction, which is your bias. And then you're going to see what range it is that you're working within. Then go down to 15-minute time frame and have a look at the framework on a 15-minute time frame, and then use a 5-minute or a 1-minute for your entry. So you can already see that once here we had a liquidity reference point on here and here. So there's going to be what above that starts to sell off to the next liquidity reference point. That in itself is a long. So we're going to do another hypothetical long in here. So I'm going to cheat here. 25%. I think it's 100. Here we have 10 pips and 10 pips. Didn't even get to the reference point that we was looking at. Done. 1% banked. One trade, one day. You'll start to see that this style of trading, if you know what it is that you're looking for and you've had enough practice, you'll start to see a shitload of ranges, both long and short, in the marketplace. And you can, don't get it confused. I'm not trying to say long here, short here, long here, short here. I'm not saying that. I'm saying just frame a one trade in a specific window of time and just let it go, trade it, take the 10 pips and just be done with it. And then if you have the discipline to do that, trust me, you can then be consistent enough to then up that range to 15 pip range, 20 pips, etc. But still keeping that level of precision and the drawdown to a minimum. So that, fucking hell, am I actually going to answer your questions? There's a little snapshot shot button up here. Click that and it will save as a file. Down the bottom, it'll be somewhere down here, or if you're on Windows. store those in folders, date them, and put them in. So, for example, on my desktop, I've got a folder called Journal, Trading Journal, and then inside that journal, I'll have Euro USD, GBP USD, S&P 500, and just do it in hindsight. Collect as many as you can, screenshots of how many trades you see in hindsight on whatever markets it is that you're trading, and then just store them in a folder and then refer back to them. Because when you refer back to them, what will happen is my memory is awful, right? I have an awful memory. But there's weird things with me where if I've watched a movie, say for example, my favorite movie, if I've watched a movie 10 times, I can recite the whole entire movie. Or say, for example, like I listen to a song like 4 times and I know all the words. Because I enjoy those certain things, like I have an interest to remember those things. When you're trading, what you'll find is that you'll see certain things like this here, for example, and you'll see that as long and taking out this liquidity reference point. You can see that this in here will happen in the future. So you can see, oh, hang on, this looks familiar. This kind of looks like this down here, but inverted. What will happen is you'll go into your journal and you'll go, fucking hell, that was last Friday that happened. And then you'll pull up last Friday's screenshot, and then you'll read all your notes on there, and it will say, this is what I'm expecting to see. This is what's unfolded. And what you'll see is you'll start to see things repeat. That is experience that you get from doing the work that no one, I repeat, no one can teach you. Just grind it out. You have to get through the shit, basically, to get where it is that you want to be. So with that, what are we talking about now? We've got, so that's process. If you can reduce your stop loss to 7 pips, can you harvest 7 pips instead of being 10? Being 1? Yeah, you can do that, but obviously what you're trying to do is you're trying to balance things out. So we said that, okay, the opportunity here in this marketplace, here you have a 10 pip range, and it's quite easy to get those 10 pips from a take profit standpoint. However, inverse, if you're wrong, you will be wrong very, very quickly as well. So if you're on the wrong side, you can see that we have to respect the levels of risk and the level of experience that we currently have. If you was to say, for example, this trade here, and we said, okay, so we're going to long that level in here, and we're going to reduce our stop loss to say 7 pips, which is absolutely fine. It's still below this swing low. What you're doing is you're trying to get a little bit cheeky with it. You're trying to get too close to the marketplace where it can take you out. I had a brief discussion on one of my pipcasts, if people watch my pipcast, and me and Ben were discussing about brokerage, different brokers. And because you're trading within their house, and it's their liquidity that you're using to trade, and it's not like a real market, it's not like a futures market or anything like that, it's not like a real order to buy or sell something, like you're on their books. The broker can see your order. So the market, in the sense that they can't see everyone's orders, but from a broker standpoint, the broker can see your order. If they have the ability, when you sign up to a broker, it's in small print, and it will say that they're basically allowed to open up the spread on you. More or less, it's worded obviously a hell of a lot differently, but what will happen is that this wick in here, while we're on a demo account on TradingView, and this is the wick, if you was to get too close to the marketplace, we've got a wick here that goes into price point. Let's have a look how much that is real quick. So you can see that was like 3.5, so 3.5 pips. If your stop loss is only 7, there's a difference of like an extra couple of pips. And what they'll do is so if you know about spreads and things like that, your stop loss might be, we'll have a look at it here. Your stop loss might be 1.18396, but in actual fact is probably more like 1.183. So it'll be up. So it'll be 1.1841 or something like that. So it will be higher than you actually. So when you're trading, you'll notice that it will get to say here. So your stop's down here, but it'll get to here and it will take you out. That's the spread. So the broker can expand that spread because they're in your house. You're in their playground, so to speak. You can see that it'll get to that point and they'll just open up the spread on you. So even though, yes, I agree with you, 7 pip stop loss and a 7 pip gain, in actual fact, it's 1-to-1 and therefore it's 1%. Try and stick to 10 if you can and don't go any lower than that because the broker will they'll have a field day with you basically. Which is why I don't go any less than 10 pips. So I get that question a lot when, especially on my YouTube channel, people will say, well, you're on a 1 minute chart and you're still using a 20 pip stop. Well, yeah, because I'm trying to get in the habit of not getting so close to the marketplace that it gives an opportunity for the broker to expand price and take me out. That's what I'm doing. So even in a demo account, I'm still practicing that because when you go over to live trading and when you do that, it will be entirely up to you. You'll start to notice things like that. So yeah, with that said, we'll go back to here and have a look at some of the questions. Do you refine your hour 1 level to a 15-minute or 1 minute level to have more precise entry? Yes, I do. Genius to trading. So mental, that's a great question here. Genius approach to trading and protect mental capital and psychology. When you start to trade, one of the first things, and I remember this so vividly, you will start to realize that you can't hold trades. Like you really try to hold it, but you're not sure like when to take profit and when to be just done with it. Like, take your money and run basically. Mental capital is a massive thing. Some people will not be able to hold a short-term trade. Some people won't be able to hold a position trade. There will be people that can hold like what's his name? He's on Instagram. Oh, Underground Trader. Fuck man, like he's on like a weekly charts, right? And he's holding these for weeks and weeks. I could not stomach that at all. I'm okay with admitting that, but what you'll start to realize is that you want to protect your mental capital. And if you start to see like a trade, say for example, this one is a beauty because it hits the level and immediately rejects. Whereas something like this, it hits that level, comes just short of it, just shy of it, hits it again. Some people might not be able to stomach that. And what you should do is you should really collapse the trade because you're sparing a lot of mental capital holding the trade when really in actual fact, rather than taking this one that you're not so comfortable with, what you really need to be hunting is trades like this. Whereas other people might see this trade and be like, well, it's only like what, 15 minutes, so that's a total of a couple of hours, maybe, an hour and a half. I can stomach that. That's no problem. I mean, it's not exactly going higher than this price point that I had drawn out anyway. And they'll have no problems holding that. So like I said, there's a lot of people here and everyone is different. And the way that you'll start to realize how it is that you look at the marketplace, what it is that you're looking for, everyone's going to be slightly different in the way that, you want to protect your mental capital, how long you can hold a trade for, etc. So drilling down into just a 10 pip range, which I showed you in many cases, like as soon as it hits that price level, and get rid of that box, you can see as soon as it hits that price level, within a matter of minutes, it then starts to shoot higher, and that's a 10 pip range. I reckon that happened in about 5 minutes, this trade here. 5 minutes to hold a trade should be fairly easy to do for everyone, I would have thought. If you can't hold a 5 minute trade, then you don't really have any business being in it, to be totally honest. Do you use pending orders or market? So with market orders, what you need to do is I use both depending on what it is that I'm doing. So if you have a busy lifestyle, use limits. If you're in front of the screen, you're better off just using a market order. But again, comes down to personal preference. No right or wrong answer really. But do use pending orders. If I'm busy, then yeah, I'll use a pending order. Like I said, I'm a short-term trader, so I would use a pending order. But if I'm doing something like I'm presenting to you guys today, I'm actually using a market order to enter. What should we use to enter and exit? Will you go into that a little, and how you spread those arrays from high terms? So again, I'm not going to touch on anything ICT related. One thing that I did, oh, that's what I wanted to discuss with you guys. 1 second. One thing that I wanted to discuss with you guys is that obviously I learned from ICT. You don't have to learn from ICT. There's other great educators out there that I believe do a solid job. I'm not going to mention any of their names. Some people already know who I'm referring to anyway. But what should we use for our entry and exit? What do you want it to be? What have you learned so far? My price action knowledge might be less or more than someone else. So what is it that you've used so far? What it is that you want to use for an entry? For example, some people would use ICT's concept, you know, the order block. Some people could use that. Other people might not want to use that. They'll be like, okay, well, instead what we'll use here is we'll use, fucking hell, where is it? I barely use it. What am I looking for? Fib. You can see like you've got from this high to this low. That's your, well, it's a little bit above the optimal trade entry. The way I use the reason that my fib's like that is because I'm just drawing it out into quarters. So that's halfway, and that's a quarter of between these two. That's for a different concept. I'm not going to go into it, but that's why my fib's like that. But obviously, if you have your fib, if people use fib, and you've got your 0.705 level, can't even remember what it is. I don't use it. That could be a trade for an entry. Exit is the same for everyone. It's 10 pips. 10 pip stop loss, 10 pip, done. So that's what a lot of people do, is they're trying to overcomplicate it a little bit than it needs to be. Obviously, you can see that it starts to dump, roll out of bed, and you've obviously got this liquidity reference point here, which will be a really good target, which is 20 pips. Just leave it if you're really struggling with your exits. 10 pips, done. Don't need to argue about that. You don't need to put it on social media, because all you're going to do is just invite people that, personally, fucking most of them ain't even profitable, to comment on your trading when they don't really have the right to. So that's what you're going to invite. If you start uploading, especially a model like this, people online will laugh at you because it's not 50 to 1, or it's not this, that, or the other. To be honest, if someone sent me this, I'd actually be quite impressed, because because I'm looking at the level of precision that's available and the drawdown, and I'm also looking at how quickly the trade unfolded. So they're the kind of things that people don't discuss online, which I think are quite important traits for a trader, whether you're a professional or a beginner. Again, talk more about liquidity. It's kind of like a, you know, ICT's concept, rather than not touch on it, but 90% of what I know has come from him, right? So if I know something that you don't, all it means is that I've watched more content than you and I've studied more than you. That's literally it. It ain't that I'm a superstar, or I've got this, or I've got that, or I've got the secret that you don't know about. It's literally to do with I've just studied more than you. I've wrote more detailed notes than you. That's literally all it is. So with that, how do you base your range? What you've pointed out at the high and the low. Again, if you are with ICT, not everyone's with ICT, but get rid of that. What you should just look at is for the swing points. So this is a swing. Everyone can clearly see that that's a swing low, and this is a swing high. You could use that as your range. I'm currently working within this high and this low. But that's the entire range, but you can see all the kind of opportunities of gyrations, both long and short. You can see in here that same zoom over here, this same trade that we pinned out here, does that not look exactly the same as this here? So that's the range explained. So you can work within just look at a swing point, high and low, and just work with inside that range. And obviously, once the range has been broken, you can work within a new range. You could pick this higher to this low, and that could be your range. So you can see that there's all sorts of gyrations here to get 10 pips. And then you can gravitate towards from that. What are the key factors to identifying liquidity reference points? When I reference liquidity reference points, what I'm talking about is stuff that ICT teaches. So if you want to learn, go to him. He will teach you everything you need to know. What exactly is that range you highlighted? Answered that one. You said big red candle, so the whole candle is the range. Are you talking? You're probably talking about the box that I drew. Yeah, again, that is a ICT concept. So if you don't know what it is, when I drew it out, everyone should know. If you are familiar with these concepts, everyone should know what it is. But if you don't know what it is, then you can go to him to learn. So as I say to everyone, I'm not a teacher as such. I'm a trader first. So if you want to learn, I highly suggest go to someone like him. There's other mentors out there that can teach you. But in terms of who I've learned from, that's his concepts. Point of this setup, I guess, is that on lower time frames, once you get some experience, you'll trade with 2-3 pips. Again, try not to get too cheeky with it. There has been some conversations with people about like zero spread accounts, like IC markets and things like that, or they use. I don't even know. Again, try not to get too cheeky with it, but I suppose if that is in fact true, which I haven't actually like done any research on it myself, so I'll probably go do that. That's probably how you see online, like these traders get down to like a 2 or 3 pip stop loss. That is how they're doing it, is that they're drilling down into like the 1 minute time frame. Liquidity points, yeah, explain that. Are you going to talk about what you need to see before you enter? Again, gave you multiple examples. It depends on how much you know, and if you journal enough, you will see what it is that you need to see. Do you wait for an entry signal at your area, or you take the trade because you have your stop loss set? Do you wait for an entry signal at your area? So whatever price level I'm looking to buy or sell, that is the specific price that I need to see hit as I'm entering a trade. If it doesn't hit, then guess what? I haven't traded. And what you'll find is that sometimes, you know, when people say like they're sitting on their hands, a massive thing with Stock God. If anyone follows Stock God, he is amazing at that sort of stuff where he can go ages and not take a trade because he knows exactly what he's looking for. Over time, what you'll see is that you'll want specific prices that you want to buy or sell at, and you wait for that price. And if you don't get that price, then you haven't risked any money. And sometimes not trading is better than actually forcing a trade. So over experience and time, you'll start to see those kinds of things. So at your area, or you take the trade. So again, a stop loss set. Why do we have a stop loss? Because it's protecting your capital. Will I speak on my entry rules? I gave multiple examples. I won't speak on my entry rules. There's a shitload that you can look at. Again, if you learn from the same guy as me, then you can sort of find what it is that you're looking for in terms of entry rules. How do you build spread into entries? So if you're live trading, you're using a spread account. Add 3 pips. That's what I just use as standard. So if I've got a 10 pip stop loss, then it's going to be 13 pips. So that's that. Is this recorded? Yes, this is being recorded. You mentioned early on, if you understand price delivery, is this something specific different from mentorship? And where do you recommend we learn? if you want to be a fucking nut job, then obviously the mentorship's going to be for you. From everyone that I've sort of come across in terms of their work, and this is just an opinion, by the way, it's my opinion that most educators that are out there currently are using what ICT is taught. It just seems to always come back to his stuff. I mean, his teachings on price delivery are nuts. So yeah, I would definitely, if you want to get insane with price delivery and get like really drill down into like what it is you need to know, I'd join his mentorship, because I think it's one of the best things that's ever happened to me anyway. As a child, I remember how crazy does it get from a scale of 1 to 10 compared to core content? Probably like a 5. It's the same kind of stuff, really. It's just you get given trading plans. And he sort of gives a little bit more information on certain concepts, but nothing too crazy, to be totally honest with you. For 1-to-1, you would need a higher win rate, right? Above 50%. That's correct, Evan. So obviously, if you want to make money, you need to have a you need to be correct, basically above 50% of the time to make money. So this is why risk to reward is so much better, because even if you have a 30% win rate, you can still make money if your risk to reward is correct. But if you are looking at the level of precision that's available in the price delivery, I'm telling you, 50%, everyone should be able to do, like, get it right. You know, flipping a coin, 50%, most people should be getting 60% minimum anyway. But you'll start to see the more you practice with this model. A lot of people like to system hop. Don't system hop. You need to sit with this model and really test it. Really test it. And you'll start to see that your trading will start to improve, especially your accuracy. Didn't someone say in this chat they used it for FTMO, but I was unable to pass? I'm not sure about that. But it's hard to explain ICT without explaining ICT. Yeah, that's exactly right. I mean, I'm very respectful from who I've learned from. He's amazing. Plain and simple, really. Like, if you want to really drill down into price delivery and how the markets gyrate around, his stuff's uncanny. But again, I don't like to talk about it just because it's like indirectly teaching, and he spoke about it before, where even if you was to start jotting some stuff on your charts, you're kind of indirectly teaching, and I'd rather just not be involved with that. I'd rather just remain respectful. How do you determine which order block holds more weight? Again, if you want to learn that, that's explained in mentorship. Higher time frame holds more weight. That is technically true. The higher time frame is the more overpowering or overbearing it is on a lower time frame. But again, necessarily don't really need it with this kind of model. But that's definitely true. IC markets is definitely legit. So I'm going to check those out. So sort of going off on FTMO, etc. Do you ever do weekly bias trades? If you're familiar with London. So this is, again, outside of this discussion, but that's kind of how I trade. So I'm entering on a day trade and holding it for a couple of days. What helps you to not force a trade? This is a great question. Have briefly answered it. Make sure you get your price, and if you have gone against your rules, if you lack discipline, I'm just going to put it plain and simple, you're not going to be a trader. And like I said, I want to be positive. I want to be like not an inspiration, that's fucking stupid, but I want to motivate. That's right, I want to motivate people. But I'm also a realist, and trust me, if you lack discipline, try and look at maybe your life in general. If you lack discipline in your life, try little things like, okay, well, you might be over trading. How about you wake up in the morning and make your bed? and stuff like that. Little things like that. Have some kind of discipline in your life. For me, I love obviously going to the gym. Gym is obviously a great one. Do you have the discipline to stick to going to the gym and things like that? If you are going against the rules that are in place, then you will start to see that your performance in your demo account or paper training, etc. If you're forcing trades and things like that, your journaling will already teach you what it is that you're doing wrong, which is why journaling is so important. How was the journey with the mentorship like in the beginning? It's a shitload of work. There is so much information thrown at you, and you basically just have to digest it, but not do it all at one point. So best way that I did it is that I took something and then I applied it to the charts until I was familiar with what that concept was. So kind of break it down and make it easier on yourself. Do you have any tips on trading psychology? Again, just comes down to practice and being in a demo account setting. If you risk live money before you're ready, you will have an emotional attachment to money, and you will find that when you jump from demo to live, whenever that is, then you're going to struggle. There you go. So heads up, there's so much training out there, both ICT and that you can get lost. Take a break and just start doing the paper trading to demo training and journaling. You'll be self-training. There you go. More worth your time. Then you'll understand the training more when you get there. That's fucking spot on, Craig. Or Craig. Why are you using no trailing stop loss? You will find that if you use a trailing stop loss, even if you was to zoom out in the time frames, if you are moving your stop loss to current price too quickly, you'll find that you'll get hunted. As in, like there will be a stop run occur, which is why there's no trailing stop. Why using one model? Like I said, this is just one model that I'm sharing, so you can have whatever model you want. Like I said, you don't even have to use this one if you don't want to. Data says both retail. Again, I don't want to get, so there's so many questions on like ICT concepts. I don't really want to get into it, but yeah. So it's discipline. Yeah. So with that said, I've kind of gone through some of your questions and stuff like that. What kind of other things did I want to touch on? So you can use this trading plan going forward. Talked about being a demo baller before live trading. You definitely want to be in a demo account setting before you're ready. Risk to reward and why it's not important. I've obviously said if you practice this enough and you get really good with accuracy and knowing exactly what it is you're looking for, you can then implement risk to reward and have whatever it is that you want really. Mental capital on that. Compound interest I'll cover now. Done journaling, go through some hindsight examples, done that too, and Q&A. So what we're going to do now is I'm just going to touch on compound interest, and it's just basic maths really. I'll get rid of that. So this is compound interest, and this is what happens to your money, especially if you can use velocity to your advantage and you understand this trading plan like the way that I've explained it. What we'll do is we'll say we've got £1,000 account, and we'll say you've made, say for example, for the month you've made 10%. What we got? Text, which is 100. So you've made 100 on your account, and therefore your new net balance is going to be 1,110 once the month is up. So that's based on just 10% for the entire month. What starts to happen is your new balance is now 1,000 going into the next month, 1,110. If you was to then pull out the same 10%, the 10% now becomes 110. So your new net balance after the month is up, I can move that, is obviously So that's the new net balance. Fucking hell, I've got to put a comma in there. So you can see that the difference between the 10% that you made this month and the 10% that you made the last month is an extra £10. That's compound interest. So if you can do this consistently, and you can make like 20% consistently every single month, doing very, very little, imagine what happens when you start to introduce risk to reward and things like that. You can use compound interest to your advantage. So obviously £1,000 is fairly small. We can now see that if we add a load of fucking zeros, you can now see what compound interest does for you. It's no longer £100. Get rid of that comma. No longer £10. The compound interest difference is £100. So that's compound interest. So I'm just going to. Have I missed anything, Vinny? Kind of covered everything, haven't I?
Yes, sir.
Yeah, that's right.
Just a second.
Compound interest. So yeah, just going to do a quick Q&A. I know, like, I kind of did the Q&A halfway through. Did anyone have any questions at all? How many pairs you scan to find setups, on which time frame you start to analyze the pair? So obviously, again, if you were late, then obviously I apologize, but I'm assuming that you were here from the start. You start with the hourly chart and then work your way down into 15-minute and 1 minute. So how many pairs do I scan? You can use as many as you like, really, but if you want to get intimate, try and use 1 or 2 max. It depends, again, on your stage of development. If you're kind of consistently profitable and you're already at that point, you could actually use this model and use velocity. You could use it on 5-6 pairs and you'll get loads of setups. Then you can trade multiple pairs at the same time. But if you're kind of new to trading, then I would say just start with 1 or 2. Just try not to overcomplicate it. Can you make a living out of 1 pair? Absolutely. Yes, you can. You can absolutely make a living out of 1 pair. How to journal. Been through that already. I've got 2 pages with notes. Fucking hell. That's a nice one, Eric. Eric's doing it right. If people have been writing notes, you're doing this correctly. Did you still trade the S&P? Yeah, I don't post about S&P. I like to just stick with Forex. Obviously, I am and FX. So I'm just going to say, so S&P, I do trade it, but I don't really post about it. So USDX, GP, yeah. So you only need a couple of pairs, so it's fine. The higher the pip range, the more difficult. Absolutely. So we're kind of taught if I had everyone in a room, I could say, what's easier, making 10 pips or 50 pips? And most people in this room will say, well, obviously 10, because it's less than 50. So it's just basic math, really, and common sense. Obviously the range is smaller, therefore it's going to be easier to make that. So if you keep the risk at a constant, if you had, say, oh, hang on, yeah. So if you had the 10 pip as a constant, as you get more experienced, you'll start to see the 50 pip runs, and you can then scale it. How much did you have to pay for taxes? Fuck knows, Jack. My not lawyer. I was about to say lawyer. My accountant deals with all that, and I just pay it. So it's going to be different for everyone. Rather not touch on taxes. I'm from the UK. So tax laws are going to be different for everyone. Any thoughts on FX versus indices using this model? FX is, in my opinion, I think FX is actually a little bit easier than indices. But if you look at the price delivery, indices is actually a lot better than FX, in my personal opinion. But that's just based on what I've looked at. Is there a place to learn how price is booked and delivered? Like I said, if you want to learn that kind of stuff, ICT is your guy, and yeah, definitely learn from him. Like I said, I'm not trying to push ICT down anyone's throat. You can learn from whoever you want. I'm just saying I learned from him, so therefore I'm an advocate that you should also learn from the same guy that I did. Again, market psychology, I kind of touched upon that. It all comes down to training and trying to just practice, really, trying to not be so emotionally attached, and that just comes by the way of just training yourself and being disciplined about it. Appreciate that. You recommended having trading view screen like you have the free screens in. If you're asking would I recommend it, like, yeah, if you've got it, but you don't necessarily need it, because like even if you had one up here, so for example, this is obviously like 1 hourly chart. Obviously you can just switch down to a 15-minute from here, and the levels are still going to be transpired. So it does make it clearer to see, but if you haven't got it, you don't need it. Oh, fucking hell. Where am I? What's your current view on Euro USD? Again, like I said, so James, when it comes to people asking me, what's your view on this and what's your view on that? Unless we're talking fundamentally speaking, I don't know what Euro USD is going to do, because what I'm looking for specifically needs to unfold in order for me to engage. Does that make sense? So the current ranges that we're working within, etc., they're all it's going to be slightly diverse and always changing. All right, Jack, that's bragging. That's right. He's bragging that they pay 0.5% in taxes. Everyone head to Sweden. In fact, no, don't even head to Sweden. Let's just go to Bermuda. I don't pay any tax there. And now we're just talking about Sweden. Would just the ICT YouTube stuff suffice, or would paying for the mentorship be the way to go? I did talk about that in my story on the Trading Nut, about my journey, and I became consistently profitable with his free material, but not the YouTube stuff alone. So can you be consistently profitable from the YouTube stuff alone? I do know a few people that have done that. But me personally, no. I was using free material, yes, but that was the MM12 series, which I spoke about in that interview with Trading Nut. What broker do you use? I get that a lot as well. Brokerage firms are a personal thing. For example, when I first started 7 years ago, I can't remember I used 7 years ago. We'll just talk about, say, for example, some people have had absolute horror stories with Oanda. Me personally, I didn't have any problems with Oanda. I thought they were quite good. So it just comes down to personal preference, and you just need to kind of just test it. See what brokers you do like, which brokers you don't like, and yeah, I'm not an advocate of any one broker. So yeah, that's that. Can you find OTE on the New York kill zone if we can scan 3 to 4 pairs? Absolutely, you can do that. If you use all the majors paired with $1, you will see an OTE in the New York kill zone, which can harvest you 10 pips. And obviously, if you're doing the entry on a 1 minute time frame, you can get a 10 pip stop loss, and that will be your 1% raised for that given one day. Again, you don't need to fucking use an OTE on every single pair. In the New York kill zone, you don't want to get too confused. But yeah, obviously you have more pairs, you have the more opportunity, but it depends on where you're at with your skill level. If you're kind of new, stick to like 1 or 2 pairs so you don't get confused. Was it easier for a scalping model from your experience to use entry, purge and reverse, or reaching for liquidity? Again, like what I've been saying, it's personal preference. Some people are going to see, like, as long as the context behind what the market's supposed to be doing is correct, you can enter on, like, there's so many entry techniques that you can use. So it all depends on personal preference, and the way that you get that is through practice. Any sample about how do you handle? Obviously, yeah, I went through that. So I went down from the 1 hour to 15 to the 1. About velocity, how long are you waiting to hit your TP? So not velocity. You're talking about volatility. So volatility, how long are you waiting to hit your TP? Depends on the setup. Because if you have, say, for example, the economic calendar, if you refer to that, there's going to be an injection of volatility based on the economic calendar. So, I mean, if you're in one of those, say, for example, FOMC, you used to take an FOMC trade, you could be done in a matter of minutes. So the volatility, obviously, there's going to be times where the range should expand, and it should expand quickly, but you'll get to that with experience, knowing when that should happen and when it shouldn't take place. And experience with trying S&T divergence between the three indices. No trader that only trades that setup. I actually personally love that setup. I think it's fucking brilliant because when I first started with free material, obviously the S&T was taught, and I just couldn't get on with it. But if you use it on the indices, I think it's great. I think it's really good. I don't know why, but I really, really like using them. But to be honest, I actually prefer indices to FX as a whole. But I'm mainly trading primarily FX. So we're kind of running out of questions now. So, Vinny, is there anything that you wanted to ask me at all before we wrap up?
I checked out. You covered most of the things, everything, actually.
Oh yeah,
So I will ask everyone to if they have any questions or something they want to ask from the presentation.
And just to preface it, obviously, there's I'm not a financial advisor. Everything I do is in a demo account setting. So I'm a demo baller. So yeah, you're very welcome. Everyone that said thank you, you're very welcome. It'll be interesting to see if anyone actually steps out and says, "Oh, by the way, I've been using this. Like, you should see what I've done with it." That'll be fucking awesome to see that. Yeah, exactly. Look, so Craig says, with these notes and the challenge, I'm off. So that's the challenge for you guys. I've set you a fucking challenge. Can you stick to it? Telling you, it doesn't matter whatever type of trader you want to be, you can definitely use this. $10 pips a day, you got it. 10 pips a day keeps the job at bay. And obviously, goes without saying that 30 pips a week is kind of like a low ball target. If you're doing 10 pips every single day, that's a 50 pips that you could work within for the week. That's just one session. You can, obviously, there's going to be a load more trades, but we're just going to keep it simple for now. See what you can do with it. Very well, welcome, Marco. Yeah, exactly. So Daniel's just said about busy lifestyle with the kids and everything. Like, that's what I'm saying. People have kids. Some people don't have kids. That's why I was saying, like, when I wanted to give you a training plan, I want to give it so it's like a round, as a round thing, because everyone's going to be different in the way that they view the marketplace and their actual lifestyle. Like, so I could sit down and go, everyone trade the New York session because it's the easiest. Well, a lot of you won't actually be able to do that. So kind of seems a bit pointless, doesn't it? To teach that way. Will I win the FTMO account? Depends. How lucky are you? Terry, are you Irish? This 10 pips setup, you showed us is really amazing. Not strictly 10 pips, but this method, yeah, it gives you a lot of ideas exactly, and that's what we're looking for. We're looking for ideas, trades, how many trades there are. Don't necessarily need a bias, but you can see that it teaches you how to practice, to go in and just get stuck in really, and see how many setups you can see. Vinny, are you doing the FTMO account? Sharing the FTMO?
We are giving away via
Are you
a
doing
number
that?
generator, like a random number generator. Right now, no, we will do after the show and add everyone in that.
Okay, no problem, mate.
Like right now, we don't have everyone, right?
Okay, yeah, no problem.
That's right.
Do you trade on Mondays? So obviously, people say that the Mondays is a bad day to trade because the volume is going to be lower, but that's based on a weekly range. So what we're talking about is that obviously, if you're going to be trading the weekly range, Monday isn't a very good day to trade, but Tuesday, Wednesday, and Thursday are great days to trade. With this model, you're only looking for 10 pips. 10 pips is offered on a Monday as well. Even though, because it's such a low objective, but the volatility is still there and there's still ranges forming, 10 pips you can get every single day. So I haven't given any rules about what days you should and shouldn't trade, because there is 10 pips every single day. But obviously, if you want to trade with high probability and you want to use the weekly range as your framework, then obviously we're talking about short-term trading now, which is outside the scope of this discussion. But you can skip Mondays if you want and just trade Tuesday, Wednesday, and Thursday. You don't have to. Just study as best as you can, Daniel, really. It's fucking tough out there, trust me. No worries, Terry. Thank you. I'm a serial strategy hopper. I'll stick to this and nail it down. That's what I'm saying. So, Cole, you can definitely scale this to whatever you want to be. Doesn't matter what kind of trader you want to be. You can scale it, but don't skip from this one. Try it, test it, see if it works. If it doesn't work, it will in time, because you're going to get more experience. So with that, I think I'm going to wrap up, Vinny. I think everyone's done with their questions. Hope everyone has a lovely rest of their weekend. For some of you still got the day ahead of you, really. So I'm about to go to bed. So yeah, Vinny, do you want to wrap up?
On your call. On your call.
What is this one?
If there is any question, they can. Otherwise, we can wrap this up.
Yeah, no problem. Go on, we'll end it there. So, and that is, yeah, that's all right.
If anyone will work on this presentation and work on this strategy, 10 pip strategy, you can always text about it to the end, how it's going, or like if you are struggling with it or something else. Thank you so much for your time, and we really appreciate it.
No worries, dude.
And
no worries. Pleasure.
Thank you for coming to the show and for showing us some great tips.
Yeah, no problem. And yeah, I guess well, we're gonna do another one. We could do another one. We'll see.
Okay.
We'll leave that carrot dangling. Yeah. See what happens.
We will leave it to the people, and whatever will be the response, we will head over to it.
Okay, sounds good. All right. Do you want me to end the recording there?
Yes, sir.
Yes, sir.
My boss man, remember?
Fucking hell, that's going to be a long old file. Right, I might have to upload that one to Google Drive, actually. Right, okay.